I'm Sarah Borgson-Keto, and in conjunction with NAREIT's REIT World 2020 annual conference, I'm speaking today with Joey Agri, President and CEO of Agri Realty Corporation. Joey, thanks so much for joining me.
Great to be here. Thank you very much.
Now, Agri Realty collected 99% of its September rents. How was the company able to avoid some of the challenges that other retail landlords have faced in this area?
Yes, Sarah. So we collected 99% of September and just recently announced yesterday 99% again in October. I'll tell you, it's a testament to the thoughtful portfolio construction and really the best-in-class retail portfolio that we have at Agri today. So almost 67% of our portfolio is leased to investment-grade retailers, the likes of Walmart, Lowe's. You can see them scrolling behind me. Walgreens, CVS, Tractor Supply, Dollar General, Best Buy, TJ Maxx. So the portfolio is really best-in-class retailers, many of which are really thriving in this environment, in a pandemic environment, and have seen a surge in their sales, are necessity-based, and have access to the full customer omni-channel experience, BOPIS, click and collect, delivery at home. And so they've really thrived during this pandemic. That's the majority of our portfolio.
On top of that, the company has been one of the most aggressive in terms of making new investments. Can you talk about the opportunities you see and how that will continue in 2021?
Yeah, well, we raised our acquisition guidance to a midpoint of $1.3 billion for the year. Again, that's about a 30% increase over the last increase after Q2. We're seeing really a myriad of investment opportunities across all three of our platforms: acquisitions, partner capital solutions, as well as development. For, again, those retailers that are within our proverbial sandbox, the 25 to 30 best retailers in the country. And we raised a war chest in really the heights of the pandemic in March and April of over $1 billion with our inaugural unsecured offering, as well as over $800 million in equity. And so we're deploying that capital on a highly accretive basis to earnings, but also improving the quality of the portfolio on a consistent basis. So I'd note that over 80% of our acquisitions and investment activity to date, as of 9/30, has been with those leading retailers, over 80% investment grade credit rated.
Lastly, can you talk about the company's current and near-term development pipeline?
Yeah, so I really group our development and our partner capital solutions, or PCS as we refer to, in really one bucket. I call that really with shovels in the ground internally within the company. And that's really taking advantage of opportunities, either organically driven through our relationships with retailers, or through typically private developers' relationships with their retailers. We'll either come in, take over the project, and oversee it through construction. That's similar to the Burlington and Tractor Supply we just announced recently in Columbus, Ohio, or the TJ Maxx in Harlingen, Texas, that we are just really wrapping up construction on. And so we'll continue to provide a full service value proposition for all of those retailers that are our retail partners and that we want to do business with, whether that's putting a shovel in the ground or acquiring on a stabilized basis. This company is a true real estate company seeking to create value for its shareholders as well as its retail partners.
Joey, thanks so much for joining me.
Thank you, Sarah.
And for more news and information from REIT World, be sure to visit NAREIT's website, REIT.com.